What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Tuesday, May 21st. All right, guys, Palantir stock today down 14 cents per share. That's minus 0.64% in regular trading hours. Quite the sell-off here off the open, and then kind of an attempt at a grind back the rest of the day, not quite getting all the way. But not doing too poorly the remainder of the day. So let's take a look here. Let's get a real feel for Palantir heading into tomorrow, pulling out everything we possibly can that the market gave us today. We'll look at any directional bias out of the volume profile. We'll look at the psychological levels that the traders, the institutions are watching, so we need to be aware of. We'll look at the implied volatility, important for you option traders. We'll look at the expected move for tomorrow, and then we'll finish out with the directional bias coming out of the chain for tomorrow. So let's get started here with the volume profile analysis here on the 5-minute chart. Listen, guys, by the way, I cover Palantir every single day. It's a daily upload. If you appreciate that, if you like the stock, I appreciate you subscribing to the channel. My goal here is 10,000, and I know we can hit it, but not without your help. So I appreciate that, and I will keep the Palantir videos coming daily. Now, the price action's done. We know what happened. What we're doing here is we're taking a peek under the hood. Let's pull out as much directional bias as we possibly can, if any. Sometimes there's nothing, and that actually tells a story in and of itself. So we get this sell-off off the open, and we see very normal high volume off the open. It's a little higher than we got on Friday, but still well within context. Okay, then volume quickly fades. We get red pop, green pop, red pop, out of context, green pop. None of this is obvious enough for me to go out and assign bias to. If we were assigning bias to every little random 1-bar pop, we'd be here all day and we'd learn nothing. And then as we move through the day, there's really nothing extraordinarily out of the ordinary. We head into the close, a very contextual close, some rebalancing higher volume bars on the close. We can ignore that. It's just rebalancing, right? That's very normal for this stock. Honestly, guys, this being over 2 million shares, someone could argue that's like 5% bearish bias, but you could make the same argument for this little increasing volume area with one broken up red bar on this kind of, maybe one of the more aggressive upside pushes we saw all day. You could make an argument that there's there's 5% bullish bias there. It just, there's nothing definitive enough here leaning either direction, which is interesting because it is a red day. So bears, it's not a large red day, but bears, you guys would kind of want to see at least maybe a small amount of bearish bias. And we're not really getting that. Bulls, we're also not getting any bullish bias, at least that doesn't get offset by the bearish bias. But being that the expectation is that we get at least a little bit of bearish bias because it is a red day, us not really seeing any at all isn't the worst thing to see if you're a bull. Bears, slightly disappointing, but you still won the day. I mean, it's down 0.6%, okay, at least a little bit. But let's move on. Let's take a look at something very effective, and I would argue even more simple. And that's the psychological self-fulfilling prophecy levels that we need to be aware of on the most common time frames, the 30-minute, 4-hour, and daily, using the most common indicators, the 50 period, the white line, and the 200 period, that gray line. So you guys remember back on, or actually yesterday for the weekend video, heading into today, Monday, we talked about Friday's trading day. And we had given up that 50 period, you can see back here, kind of in the afternoon, and then tried to reclaim it into the close, failed to do so. So today was all about the battle of the 50 period. Well, off the open, we rejected hard, okay? And then I saw just about the sloppiest test you could ever see of this 200 period. We reclaimed it, came down for a little bit of a cleaner test, and bounced into the close. So two things occurred here. We gave up the 50 period. Bulls, not great. Okay, well, we had already kind of given it up on Friday. We attempted to test it and rejected very hard. Bulls, not great. But, bears, you guys weren't really able to retake or at least claim that 200 period as resistance either. The bulls held on to that. It was sloppy, but, what matters is that it held. Doesn't really matter how sloppy it is if it held. So here's what I'm really watching tomorrow. Bulls, any downside test that 200 period, I want to see it hold more clean than we saw today, ideally. Meaning a test, high volume bounce. But the goal, if you're a bull tomorrow, is to finally reclaim, I say finally, it's been like 2 days, finally reclaim the 50 period as support. And that would also probably yank it into a flat, if not ascending position, which is ideally what you want it in long term, kind of like big picture. If we could have in a perfect world, that's how you would want this to look. Okay, so high volume rip up through the 50, low volume retest. I like retests, I like confirmation. I don't like to leave anything to the imagination for the opposite side. And then boom, confirmation with a high volume bounce. Bears. Any upside test of that 50 period, you want to see that reject, ideally like we saw today, but you come up and test, reject on high volume, and the goal if you're a bear is to do what you were unable to finish here today, get down through the 200 period on high volume, retest on lower volume, and then the volume pours back in as you reject, really confirming that as resistance. Now, let's move on to the 4 hour here. You can see that not a lot has really changed in terms of, you guys remember on Friday, today was going to be the battle of the 50 period on the 4 hour. And it still kind of is. We closed just above the 50 period, kind of right on top of it here on the 4 hour chart. So listen, tomorrow is yet again on the 4 hour chart, the battle of the 50 period. Bulls, I want to see that hold as support. I don't want to close on top of it. I just want to bounce away from it and make it clear that, hey, at least on the 4 hour, the 50 period is being seen as a support level. Bears, get beneath it, hold it as resistance, ideally get down beneath, retest it, and reject. Make it clear that that 50 period on the 4 hour is now resistance. That hasn't been clear the last at least 2 days. And that goes for either direction, bulls or bears, the last couple of days. So we need a definitive move here. Now, the easiest to interpret chart, the most simple story, and the most important is always the daily. Okay? Now, you guys remember, we've been talking a lot the last week about this 21 to 22 channel because the 50-day and the 200-day are not really in play. They're a little far away to call immediately in play, and this channel is primarily focused on the next trading day, at least this video in particular. So that's what I want to look at is what do we need to be paying attention to tomorrow? Well, that 21 to 22 whole dollar channel has kind of now turned into like 21.50 to 22. The channel itself has tightened down these last few days. Bulls, hold 21.50, break up through 22 is the goal. Okay, at least ideally. Now, in order to make that happen, we're looking at a move of approximately probably 2% to get up through 22 and hold. That's within reason for Palantir. That's not anything we haven't seen before. Hold 21.50, get up through 22, a break and hold to 22 sets the bulls up for a near-term test of what really matters, the 50-day moving average. But 22 comes first. Bears, any test of 22, you want to reject that. That's kind of the upper end of your channel. That's kind of what's been saving you here this last week. And the goal, I would say, is to get down through 21.50, ultimately to make a downside test of 21, because a break and hold downside of 21 sets you up for a downside test of 20, and so on, down until you get to really the ultimate goal in the near to midterm, which is the 200 period, or the 200 day. Now, implied volatility, especially important if you're trading options. Compared to the last week, it's essentially neutral. Compared to the last month, it's low. And compared to the last 3 months, it's also low. Okay, so the reason I'm giving multiple time frames is because, and by the way, this picture here is the last 3 months. So if you look at the whole thing, that's like the last 3 months. You can see the dates there on the bottom. The reason I give multiple time ranges, and I think I'm going to start doing this in the videos, is because it always needs to be compared to your intended trade time frame. So if you're looking to hold options for, a month, you should be comparing, okay, where is IV compared to the last month or two? If you're looking to hold options for the next 2 or 3 months, you should say, okay, well, where's IV in relation to the last, let's say, 3 months? Ideally, buying options when Vega is very low, meaning you're paying very little Vega value up front, that's kind of the ideal scenario. But that's not enough, right? You also have to have directional bias. But it doesn't hurt when Vega is very low. Okay? Now, if you're selling options trying to farm premium, doing so when Vega is really low, you have to start asking yourself, is this really worth it? Because you're not really getting such juicy premiums anymore, at least in a lot of cases. Now, expected move. We have weekly expirations, not daily, at least not yet. So we have to do a little bit of educated guesswork. The next expiration we have is, of course, this Friday. The expected move by Friday's close compared to today's close is plus or minus 85 cents per share. Let's do what we can to get tomorrow. We divide by 4, Tuesday, Wednesday, Thursday, Friday, 4 trading days left before that occurs. But that assumes all green days are all red days, right? So I add back 50%. That's what I'm doing in this market. Tends to work the best, at least as of right now. That may change in the future. Actually, it probably will change in the future, but for now, we're doing 50%. And that gives us an expected move that's a 1 standard deviation approximately, expected volatility by tomorrow's close, Tuesday's close, compared to today, Monday's close, of plus or minus 32 cents a share, approximately. That's, with a little bit of educated guesswork, that's about the market's volatility expectation for tomorrow. Okay, and it's important to know where the baseline volatility expectation is, because if you disagree with that one way or the other, that's very helpful in effectively positioning yourself using options along with your directional bias. Now, you might be saying, well, what about directional bias? Let's look at volume. So 237,000 contracts traded today. 168,000 of those were calls and 69,000 puts. Okay, so that's a heavy, it's not unnatural to see this on Palantir. It's been this way for months. But that's pretty heavy here today. Bullish bias to the call side. But if we break that down by time frame, the 0 to 20 delta range, the short-term speculators in particular, right, at least the highest concentration of them, 55,000 calls, 21,000 puts, call side bias out of those short-term speculators as well. Guys, I hope to see you come trade with our private community every single day at that link in the pinned comment. That's where I'm sending out my daily scalp setup alerts, in-play stock alerts, human verified unusual options activity, and of course, working with my platinum one-on-one group. And hey, if you're appreciating the daily Palantir content, the best thing you can do for the channel to help the channel grow, again, my goal here is 10,000, is just leave a like on the video. It's free, takes half a second, and I appreciate it greatly. I'll see you in the next one.